Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back CEO Omri Brill and Martin Vanderbend, who's the Chief Partnerships Officer from Adcore. Adcore trades on the TSX Venture Exchange under the symbol ADCO and also trades on the OTC under ADCOF. Company's currently trading at 18.5 cents with about 60 million shares outstanding, or about an $11 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Adcore, we haven't talked to you guys in probably close to 2 years, so happy to have you back. Obviously a long time, so I expect there's going to be a few updates since we last spoke. Lots going on in other ways, unfortunately for you, Omri, where you're at, but maybe for those that aren't familiar with Adcore, why don't we just jump into it and tell us exactly what the company does, and then we can follow up with some updates and some questions.
Absolutely. So first of all, it's our pleasure to be with you guys again, especially on the Thanksgiving weekend. So, so feel very, very lucky for you guys to hear what we have to say in this weekend. But yeah, let's jump into it. Let me share my screen. We're going to go quickly over the Adcore presentation just to give folks high-level understanding about what the company is all about. And then obviously we can continue, like you suggested, Paul, with a Q&A session. So if you guys ready, I'm ready as well.
Right ahead, you bet.
Okay, cool. So obviously, a bit about Adcore. We start with a disclaimer, but because I like you guys, you don't need to read everything, so you just can read through it quickly if you want. But who is Adcore? That's the most important thing, and basically Adcore is the AI-powered technology advertising company, and basically what we do, we build cool technology and platforms that automate the online marketing, and we do it very successfully. I think the numbers that they're going to present in this presentation are going to speak for themselves. And since we didn't have a chance to speak with your audience for the past 2 years, and I would say the companies that you are talking to right now is a far better, stronger, more developed and mature company than where we were 2 years ago, which is obviously a good sign because it means that we've been working very hard in order to continue growing and building the company and the business. The company vision is effortless marketing. In a sense, we wake up every day very early and work very hard in order to make our clients' life very easy. So we want to build the best tools, the best technology for them in order to automate everything that is online marketing related, and basically for their online marketing to be as seamless and effortless as possible. Just few high-level investment thesis about Adcore and why we believe Adcore is such an interesting story to tell. So I would say, it's a fast-growing company. If you look at Q1, Q3 numbers, which we already released, then the company grew it almost 30% year on year if we compare it to the same period last year. So quite an impressive top-line growth. The company also have good margins. So basically, you want to know if the company is growing. Yes, we're growing 30% year on year. And you want to know if the company is profitable. And yes, the company is profitable. Good margin, like I say, 41% gross margin. And basically, that's within what we would like to see between the 40% and the 50%. And if we're talking about profitability, 1 million adjusted EBITDA, again, in the first 3 quarters of the year. And if you look at just the tech activity of the company, which is the core activity of the company, it's 2.6 million in adjusted EBITDA, which is quite nice. And again, bear in mind that for us in the advertising business, Q4, it's the strongest, traditionally supposed to be the strongest quarter of the year. So whatever we did up until now, it's just the starter for what we can do in Q4. And last but definitely not least, the company holds proprietary technology. All the growth that we are doing, or a lot of the growth that we are doing, is achieved due to the proprietary technology that the company developed. When we look at the company market share and potential market share, it's massive. So it's already to date, 2023, we're talking about 900 billion, which is massive online advertising globally. And equally important, this market projected to continue to grow almost 30% by 2026 to 1.16 trillion. So very big market is today, but it's also growing, and basically that's give Adcore even more tailwind. That's actually two very interesting graphs that tell an interesting story about the industries that the company is operating. On the left graph, we can see that Google and Meta dominance is fading out. So the peak was around 2016, 2017, which was almost 50%, just Google and Meta by themselves, from the entire pie of online advertising. And actually what we see is that since 2017, they are losing ground in this rise of alternative channel or networks like TikTok and others. And basically, the more complex our industry become, actually, it's a good news for a company like Adcore. And you see it in a second that we can see it in the middle and be an hub between all these different networks. And the same story, equal story, I would say, on the right graph for the online market share of the US online advertising. So again, the peak was around even earlier, around the beginning of 2000, and then it went flat and it's going down as well. So that means these other markets that are now building more momentum, and basically it's interesting as well. So again, what used to be a very, I would say, simple industry, Google and Meta dominate more than 50% of the market. And if you look back, maybe the US was around 70% of the market. Now it's become much more complex. Many different markets, many different networks, and there's the need of technologies that basically can work with all of them. And this graph actually tells this exact story. So if the year was 2007, and somebody would come to us and say, you want to do online advertising, that probably would tell him, you can just open a Google advertising account, maybe target the US, and you should be just okay. And fast forward 2023, it's much more complex, right? So you need to be on multiple networks like Meta, like Instagram, like YouTube, like Microsoft, like Google, and many others, and obviously maybe operate in many different markets. And over there, there's becoming a need for somebody to be in the middle, for a technology to be in the middle. So instead of now having relationship with every single network or having relationship with every single market, you can have a single relationship with Adcore, and Adcore is in a good and lucky position to have multiple relationships with different networks. And the same goes obviously with our ability to support different markets as well. And the same concept goes by the Adcore technology, and Martin will touch the technology offering in more detail in future slides. So when we're talking about our ability to operate in different markets, Adcore to date is quite a global company and organization. So headquarters, as Paul maybe mentioned, are in Tel Aviv, Israel, but the company is very much global company. So we are publicly listed in Canada. We have 2 offices in Canada, one in Toronto and one in Winnipeg. We have another office in the US and 2 offices in China, one in Shanghai, one in Hong Kong, and another office in Melbourne, Australia as well. So if somebody come to us and say, I want to, for example, I'm an Australian company, but I want to target the US, for example, or maybe I want to target the rest of APAC, then obviously we have an excellent solution for them. So it's not only having the right relationship with every single network, also we have the ability to operate on multiple markets, multiple languages, and around the clock if needed as well. And the same concept or the same abilities that we have is, let's say, the global spread, we have with technology. So historically, the company, when Adcore just started to have like a proper technology, maybe 10 years ago, it was mainly about campaign creation and feed optimization. But then the company took a strategic decision to what we call vertical integration. So instead of giving a single solution for a single, let's say, touch point across the marketing journey of a client, we want to be in every single point. So if the client started with account creation, we want to have account creation technology or application for it, media research and planning, feed creation optimization, then campaign creation, monitoring and analyzing, reporting, and financing and budget. So every single thing that the client would do in order to run successful online marketing campaign, we would like to have a solution for it. And this is why we came up with the Adcore Marketing Cloud. So the Adcore Marketing Cloud, it's similar, you can think it like similar to what Adobe did for designers. So the same concepts that Adobe did, that they put many different designing related apps under one roof, which it's the Adobe Creative Cloud. Adcore took the same approach, but for online marketing. And basically, maybe Martin, you want to take it from there and cover a bit the technology aspect, maybe show us one or two apps so the audience will have some feel of the technology offering and what the technology is all about. And then I can maybe talk about a bit, the numbers behind Adcore, financials, and everything about it.
Thank you, Omri, and absolutely very excited to show today one or two apps of our technology. For that, I'm gonna share my screen as well. And first, I want to go to our website, adcore.com/technologies. This is where, as Omri mentioned, it's where we display the Adcore Marketing Cloud, which is a fully SaaS solution, meaning people can log in and use the technology fully online from any device, any part in the world. And we built different apps over the course of the last 15, 16 years. And like Omri mentioned, where we all started with campaign creation and optimization, we saw more need in the market for also account creation, feed optimization, alerting, reporting, all the things. So we built all different apps over the course of these years and making us a much more diverse company. And also making sure that we're able to cater to different needs for different clients, so different size of clients and also different stages where the client is at. So for today, I'd like to show one of the apps that we created called Effortless Marketing, which sits on top of the Shopify ecosystem and also WooCommerce, which is part of WordPress. So for this, I want to go to the Shopify store, Shopify App Store. You can compare it a bit like the Apple Store or Google Play Store, where you can download apps for your phone. And similar type of environment has been built by Shopify, where you can install apps on top of your existing website and e-commerce website specifically. Because what's very important in our industry is obviously having a website is one thing, but you also need this traffic and you need to have relevant traffic to your website. And that's something that you need additional tools for. You need to connect with Google, you need to connect with Microsoft, with Meta. And we made a technology to integrate these channels and integrate it with Shopify. And that's obviously one of the biggest e-commerce store builders in the world, with more than 1.5 million stores out there. So the technology can be installed in the backend of Shopify App Store. And I want to show a 1-minute video to show the backend how easy it is to set this up. For that, I'm gonna quickly make sure that I also share my sound. So you're able to hear the sound of the computer. Let me see. It should work now. Can you hear the sound?
No, unfortunately, I can't. No.
Okay, I will walk through what we're seeing on the screen. So here's where the feed is prepared for the different channels. So Google, Facebook, and Microsoft. People can select one of the channels or a couple of these channels. And in the technology, you can set your budgets and goals. So you can say, I want to spend, let's say, $100 a day. And within that, I want to make sure that I can reach my ROAS goals. We define certain settings. So you can say, I only want to advertise for my products that are actively in store. And I want to make sure that I only advertise for relevant platforms. This is where people select the channels they want to advertise for. Typically, we recommend all three, but some might start just with Google, see the success, and grow them to other channels. We have Performance Max integration. That's a new product from Google, where you run very profitable campaigns on your media buying on Google. And again, in the dashboard is where you set all the settings for your budgets and what we call a return on ad spend goals, so the ROI of your campaign. This is a great way for us to show the capability of digital advertising, to give them a sense and a feel of how to get all these revenues in, and typically also a stepping stone to our more advanced technologies, which are also part of the ADCO Marketing Cloud as a SaaS solution. I want to spend 1 minute on another technology and then hand it back over to Omri to go over the financials. So another technology we built and our clients love is called SAMDoc. Again, it sits within the ADCO Marketing Cloud, so people can seamlessly click between the different apps depending on their needs. And this technology is basically auditing your campaign performance, and it gives you a score. So within 30 seconds, it pulls all the data from, let's say, your Google Ads account or Microsoft Advertising account, and it gives you the score, and it identifies how you're performing. And for instance, is there any waste in the account? And what we typically see is a lot of advertisers has a lot of waste, meaning they spend money on campaigns that are not generating revenue. So the system is able to identify the waste, gives the number back, and gives us insights and information how to save that money and reinvest it in campaigns that are more profitable. This is our technology that we really help to win businesses, or our agencies we work with, to save a lot of time, because if you want to make an analysis like this yourself, it probably takes you half a day, a full day. And this is a matter of, let's say, 30 seconds to generate a report like this. So this, along with many other apps, is really the strength of Adcore. And again, for different stages and seniority of the client's level and the number of budgets, we have different apps, different functionalities. And we continue to build more and more apps for our client portfolio. So with that, I want to hand it over back to Omri to go over some financial slides.
Cool. Always interesting to see the apps, you know, and thank you for the nice presentation. But then let me go back to the original presentation. So as Martin mentioned, Adcore Marketing Cloud, to date, actually, we have 7 different apps under the Marketing Cloud roof. All of them located under what we call the Marketing Cloud. We have Media Blast, which is account reporting and analysis app. Effortless Marketing, which we saw the nice video. It's a plugin for Shopify, which is a famous brand in Canada, obviously. And basically, it's allow every store on Shopify to automatically create a product feed and then use this product feed to create, again, using the app straight from the app. It's Google Shopping campaign, maybe it's Meta campaign, and vice versa. Feed optimization, views, campaign creation, alerter, campaign monitoring and forecasting, and Hurricane, which is a performance-based campaign app as well. So if we're going to talk a bit about the company financial, then if you look at the left slide, which is the quarterly revenue slide, then we can definitely see that since Q1, 6.8 million in top line revenue, and then another 6.8, a bit more, and Q3 was 8.2 million in revenue, and that's represent, like we talked about before, almost 30% year-on-year growth if we talk the first 9 months of 2023 and compare them to the first 9 months of 2022. And again, seasonality wise, historically, the way the year is building up for us, it's always going to start a bit slow at Q1 and then Q2, and then it's going to pick up due to the summer holidays and stuff like that in Q3. Then obviously the peak of the year going to be in Q4 because all the holiday related sales. And on the right side, the top right bar, we can see the yearly revenue. So 2018 was 12 million, and then 2019 was 15 million. 2020 it was 23 million. 2021 we had the peak because of COVID of 35 million, and 2022 was 26 million. Bear in mind that what we achieve up until now, 9 months within 2023, is almost compared to the entire year of 2022. And if we look at, let's say, the revenue split between geos, then we can see EMEA today is the largest region for us, and then APAC, it's 30%, and North America another 20% of the entire pie. And if we deep dive into the quarterly numbers, then Q3 2023, top line revenue 8.2 million, and again it's 10% year-on-year growth. Gross profit was 3.3 million, adjusted EBITDA was 0.2 million, and total working capital remain almost the same compared to the previous quarter at 7.7 million. And you can say, okay, does the company burn cash? Yes, so the company don't burn cash. Actually, we were cash positive in Q3 2023, and the company is also debt free. So under the current and we do have cash in our reserve. So total assets for the company is 7.8 million. The cash position is 7.6 million as of the end of last quarter, and we are debt free. So actually having no debt and having cash in our bank accounts is actually good things in the current financial economy environment, obviously with the high interest rate. So it's not a bad thing to have, I would say. And if you look at the cap table, obviously there's a big gap between how well the company is doing as a company and the way the company currently trade. So on the left side, we can see the cap table. Total outstanding shares are 61 million. Trading float is around 30%, 19 million. Current share price is 0.18 to 19 cents. And at the current EV, if you deduct the cash component, it's around 5 million or 4 million. So whatever we are doing in a gross profit in a single quarter, it's the current company EV. So obviously we believe there's a big gap between how the company is trading and what we believe the company is worth. And the company is taking action. Obviously we are buying back shares in the market, both as individuals and as the company. This is the second year that we have the NCIB plan of purchasing back stocks in the market, and the company believes that obviously that if we are undervalued, then basically it's actually create an opportunity, and hopefully some of the today's investor will believe the same and take position the same way we build our position. So just to sum up everything we discussed, and we discussed few things. Obviously we discussed the technology offering, we discussed financial. So just to sum up everything. So again, we see tectonic change in our industries, like it's becoming much more complex landscape, many different networks. It's not just a game of Google and Meta by themselves, many different markets. It's not just the US. And this actually complexity is a good thing for Adcore, because again, the more complexity the market is going to be, there's more need for solution like Adcore that can sit in the middle and become an hub between the different networks or the different geolocations. Fast growing company, right? So 30% year-on-year growth if you look at the 9 months of 2023 and compare it to the 9 months of 2022. Good and healthy gross margin, and the company is profitable and making cash as of Q3 2022. Proprietary technology, we saw only a glimpse of the company technology and some apps, but trust me, we have a lot of other apps that all of them are very interesting and deliver real value to our clients. And equally important, we have plenty of headroom to continue growth. So it's a huge market that we are serving, markets that continue to grow. So there's more and more money going online, whether it's from offline budgeting that's shifting online, or from new businesses that will start as pure online businesses. But we are in the right industry and in the right time for this industry as well. I think that's it, like leadership, obviously myself, the company CEO and founder, together with me in the C-suite, we have Roy Nevo as the CEO of the company, CFO is Amit Conforti, Martin is the CPO for the company, and we have a great team of people. Most of the team, by the way, have been working together for many years now. So like the average time of a C-level suite working with the company, I would say it's well over 7 and 8 years. Yeah, and that's being said, I think like we can jump right to the Q&A session.
Fantastic. Thank you, Omri. Remind everybody that's listening, if you've got a question you'd like me to ask the management team here, feel free to use the chat function and I'll ask the question. Just one question off the top of my head. You obviously deal with agencies, but you also deal with sort of direct sort of advertisers. What would you say is the breakdown in terms of percentage between the two? How could you best describe that sort of difference in client?
Again, sorry, the question again?
Yeah, so you get revenue from both agencies and direct from sort of advertisers themselves, the customers. Maybe give us a revenue breakdown, percentage-wise or however you want to describe it.
Yeah, so historically we used to talk about these two type of revenue stream, but as the company grew and actually the landscape become more complex, we have multiple revenue streams. So we don't really divide now anymore between agency or direct advertising, and sometimes we also have like a mix between, so if historically one solution was mainly for direct advertising, now it can serve both type of clients or even other types of clients. So I think if you look at AdTech as general, we don't divide it into segments anymore.
Gotcha. Well, then give me a sense then, when you go to sort of acquire clients, how do you get clients? How do you go and market yourself to these advertisers?
Okay, so that's actually a very good question, and obviously there's no one answer how do we acquire client, because there's always multiple effort and multiple ways in how we can acquire clients. I would say it's very much depend. If you're talking about direct advertiser, for example, I would say one of the best methods is actually referrals. So referrals can be existing clients that refer us more clients. It can be people that we work with and our type of partners or reseller for the companies that can refer us businesses and stuff like that. And historically, that's the best source so far of acquiring a new client. We have 70% win rate. So if you're going to refer us a client, there's a very good chance that this client will become actually an active client and a paying client for the company. So I would say that's the number one source. Number two source probably going to be inbound leads. So that's usually people that are going to go to our digital assets, whether it's our website or social assets, and basically read, what the company have to offer, leave a lead, and basically we're going to follow up this lead. And again, over there, we have like 60% win rate. So it's still very, very positive for us. So that's, I would say, the main two sources if we're talking about direct advertiser. And if you're talking about agencies and stuff like that, then I would say main source to date probably is inbound marketing. So again, leads, but more zero touch funnel or almost low touch funnels that basically people can go online, open their own account, for example, test the technology itself, and then convert. So it's almost without any support from our team or with very minimal support. So that can be one source of client acquisition. Another source of client acquisition can be outreach, so type of outreach activity that the sales team is doing. But again, there's like multiple ways we can acquire clients.
And then as far as, I mean, it seems like you're always innovating, you're coming out with new products or different versions of products. How do you best describe sort of what else you're working on? Is there any new initiatives, any new, even new geographies? What sort of new stuff are you doing?
Okay, so that's actually a very good question. I would first say what the company's strategy, and focus is when we're talking about technology, and then I can give you a more concrete examples if needed. So I say, like in terms of strategies, a few things when we think about, okay, what technology we should develop next, or which technology we should further develop, we think about the following things. Is itself more larger type of clients, more enterprise type of clients? So if the answer is yes, there's more likelihood that we're gonna go ahead and give it a priority. So the company realized over the years that this is the type of clients that basically are more profitable for the company. So this is one thing that we would probably gonna look at. Another thing that currently we're looking at is it AI related? So if you can utilize AI and utilize, all this AI power now that we all of the sudden have and integrate it within the technology, that's again going to get a priority right now. So that's another example. And then last but not least, I would say, does the technology also serve the company internally? So if there's like certain department or group within the company that's going to make use of this technology, then we know, okay, we have like for sure like a core clients that can use this technology, and basically it is like more business sense in order to go ahead and develop it. So I think, like, again, in an ideal world, it would be more enterprise type of clients to serve AI related and serve some kind of business entity within the company itself. So that would be like an ideal app for us to now to double down and do.
Gotcha. And then Omri, what challenges does the company face right now? What sort of keeps you up at night?
Beside the war with Hamas.
Yes, obviously. Besides that, unfortunately, yes.
Yeah. So yeah, so I would say like general concerns of the company, I would say, are the following. Believe it or not, it's still people, and I've been saying that since COVID. Unfortunately, the issues remain the same. So I would say, and there's multiple challenges regarding the team. Obviously, these retention issues. You want to make sure that the people are happy, they're staying within the company, they can grow within the company, and company grow. So that's, I would say, one challenge. But I would say over there we're doing quite an okay job. I think like even a bigger challenge is acquiring new talent. So, and that's a challenge by itself, because currently every single time that you're going to speak with me, probably we have 10 different positions open in the company, in different offices, different types and stuff like that. And finding the right talent, recruiting the right talent, is always a challenge, unfortunately. So I think like people are always going to be challenging, and that's unfortunately that's not really changing. So that's, I would say, one type of challenge that the company is facing. And I would say another challenge is, how can we continue grow all the time? Because as a public company, you're only as good as your last quarter, right? So you want to make sure that the company is continuing to grow, the company is profitable, the company is spread its revenue streams, and basically don't take unnecessary risk and stuff like that. So I would say that's the main two challenges. But again, running a multiple international business, trust me, there's like always challenges. So it's not like coming it's like if you want to sleep well at night, don't start an international business.
Okay. Good advice. I appreciate that. Omri, so as investors like ourselves, what do you think are the key metrics or maybe catalysts that we should watch out for the most with the business sort of going forward?
Okay, so I would say the following, like now numbers don't lie, right? So if the company continue to grow top line, bottom line, and midline, then obviously we're doing something good. And that's true if you're an online marketing technology company or you're an oil company, you know, like so numbers, I would say, wouldn't lie. There's not much difference about it. I would say specifically for companies like Adcore, obviously we have the giant in our industry. So you can look at, let's say, how good Meta report or how good Meta are doing, how good Google doing, and that's going to give you a general indication about our industry. Because both Google and Meta are, I would say, 80%, 90% about online advertising. That's the most of the revenues that these companies are doing. And that's going to be a good catalyst. So if Google have a good report, Meta have a good report, and usually it's the reporting before us, that can be a very good indicator that there's something good going within the industry, and that's always a good sign. So I would say, look at the numbers, look at the financial, make sure that the balance sheet of the company continue to be strong and even getting stronger. Look at what the giant in our industry is doing, and that's a good signal or indicator of what Adcore can do. And I say that you have more than enough to get you going.
Fantastic. And then lastly, is there anything that we didn't speak about? Is there anything you want to make sure that everybody sort of walks away with today? Maybe a key message of some kind?
No, I think, like, again, you know, like for us, it's almost unfair because we know our business inside and out, and we are working very hard every day, you know, on multiple locations with multiple people in order to build a great company. And trust me, this is what we are doing, and we do it quite successfully. And I think, like, people ask themselves, you know, if everything is so great, if the numbers are so great, if the company is growing, how come it's maybe trading where it is trading today? And then I say, like, there's no hidden, like, there's no secret over it. It's just like the way the market is. It's either, you know, overshooting and undershooting. And I think, like, that's represent a buying opportunity. So I think, like, again, it's a good company, have a very good balance sheet. We know what we are doing. We've been around as a company for more than 16 years now, and as a public company, more than 4 years now. So we have good understanding about what's need to be done, both as private company and now as public company as well. And I can assure you that it's a solid company, and it's like best day is still ahead of us. That's I would say the bottom line.
Fantastic. Fantastic. Well, I appreciate it. Well, we've been speaking with Omri Brill, CEO of Adcore. We also had Martin Vandenbend. My apologies for messing up your name. Thanks for joining us today. Congratulations on the success so far. And of course, hopefully you stay safe. But we look forward to catching up with you pretty soon.
Guys, it's our pleasure to be here again, and hopefully we don't need to wait another 2 years before you guys invite us again. And for everybody, even if you're in Canada, enjoy the Thanksgiving holiday. Think that you are south of the border, and have the best holiday season for everyone.
Thank you so much. Thank you. Bye for now.